Let's talk about some of that right now. Of course, in particular, 2026, what we can expect in terms of that spending. Rohit Kulkarni is Managing Director and Senior Research Analyst at Roth Capital Partners and joins us now. Rohit, good to have you. 2026 going to be more of the same when it comes to the big picture in terms of spend and return or expected return?
Hey, thanks, David. Happy New Year's Eve to both you and Sarah. Yeah, I think it's more of the same, but I think the market sentiment is going to drive some of the commentary. I think market sentiment is on a razor's edge. If you think, you said Nasdaq was up 20%, but for the first time in several years, mega caps are not outperforming Nasdaq. So there's a question to be answered. If you're spending hundreds of billions of dollars, when do the returns show up? How do the returns show up? And in the meanwhile, how does the transition play out? I think the first half is probably, we will need more answers to that. And by that, there's more explanation to do. I don't think we'll see revenue upside, but just cost discipline. Better cost discipline is what we'll expect, either through capex commentary or probably more layoffs at some of these large companies.
Right. But if we were to see, I mean, again, what we have not seen and what the market, I think, has been concerned about, at least, or worried that we might, is one of the big companies saying, all right, we've spent too much, we're going to pull back. We haven't seen that. Do you expect in 2026 that we might?
That would be a very spooky thing for a large mega cap company to say. If they come out so early, it's almost a game of chicken. Who's going to be the first person to say that? I would be very surprised if either of the large hyperscalers would go out and say that we are taking a pause. Rather, in my opinion, there would be some extraneous factors like supply chain issues, power not being available at the right time at the right place, such as that would be kind of quote-unquote excuses that would kind of hint that there is going to be a measured capex coming up in the pipeline. But in my opinion, I would just say no. It's going to be very hard for a company to say that.
So how do you know? How should shareholders know, Rohit, if these hyperscalers are spending too much? Mm-hmm. If Meta and Google and Amazon are spending correctly? I think Amazon's spending the most, and interestingly, its stock has underperformed the most of the majors.
Yeah, absolutely. I think so. There are various different specific metrics and variables that investors will look at. With Amazon, we look at cloud computing. If it accelerates, probably they have a longer leash of spending. Google has probably demonstrated the best innovation skill set. Meta is in somewhat of a penalty box, given they have the only single kind of single leg pony, if you will, one trick pony that they have. So I think each of these companies are measured on a different metric, but accelerating revenues in first half is something that everybody would want to see for them to continue to spend into second half of 26.